Hey, hello investors and future investors. Welcome to the channel. For today's video, I'll be showing you how to find a stock expected move. I'm going to show you how to use this information in order for you to go ahead and choose your strike prices before getting into any options contract. In addition to that, I'm going to show you how to find a stock P&L or the profit and loss before you get into the trade. And even if you're already in the trade, I'm going to go ahead and show you how to find the expected move and the P&L. So if you are new to options trading or you're trying to use options to make some additional income, then you definitely need to subscribe to this channel. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be showing you how to find a stock expected move, and I'm going to be showing you how to determine the P&L before you get into trade. And if you're already in the trade, I'm going to show you how to still find the P&L in order for you to decide on an exit strategy. Now, you guys know how we do it. Let's go ahead and get down and dirty with options. So, as you can see here, I have this contract open of Robinhood. I do have the 115, 114 put selected. This is a spread right here. So as you can see right now, I'm down on the trade. I'm down around 40% or $12. So what I wanted to show you is that now that I'm already in this trade, I'm going to show you how to do the simulated returns or show you how to get the P&L. So we're going to go to the simulated my returns right here. Now, what that's going to do, you're going to have this chart open up. What this shows you is that currently, right now, September 17th, at the Robinhood price of $117 right down here, you're going to see that you're going to be red on the trade. As you can see, the 17 to the top here. Now, as the time progresses, what you're going to notice is that to the top here, this is going to change as the time goes by. If Robinhood stays at this current price, I'm going to show you how to get a price to change in just a second. So if you were to continue and just keep following this line here, you're going to see the closer it gets to expiration date, the more the odds are in your favor if the share price stays at 117. Remember, as you can see to the top left right here, my prices are 115, 114. So once Robinhood share price stays anywhere above the 115, I should be winning this trade very easily. So right here, you could see October 31st is when you're going to break even on the trade if the share price maintains 117. And as you go past that, you're going to see you're going to go all the way up until you hit max profit of $30 on the day of expiration. So you could go ahead and close this trade, or Robinhood is going to do that for you. Now, I'm going to show you how to use this information in order to do your exit strategy. So let's go a bit back here, and I'm going to try to find the $25 mark. So the $27 mark, we could go ahead and use that. Now, once I did this trade, I received $30 upfront. That's mine to keep. Now, if I wanted to close out this trade before expiration date and I want to pay to close this trade, let's say I only want to pay $3. So I'm going to wait until I'm up $27 on the trade. So let's go ahead and go back. I'm going to show you how to get the exit strategy. So what we're going to do is that you can see Robinhood already select close right here. So I'm only willing to pay $3 in order to give back to the market in order to close this trade. So I'm going to go here to the limit price right here. I'm going to type in 0.03. I'm going to go down to the bottom where it says time in force. I'm going to change this criteria right here. I'm going to move from good for the day. I'm going to go down to good till cancel. So what this is going to do, this right here is an exit strategy. What this does is that I no longer need to pay attention to my phone or be on my laptop and wait until Robinhood have a move in this direction. Once I go ahead and do this, this is my exit strategy or my stop loss, my stop limit. So I could just go ahead and hit review, and then I could go ahead and hit submit. So as you can see here, it's telling you that I'm willing to pay $3 to close the trade, and my collateral is going to be released back to me. The amount of money I'm willing to pay to close the trade is only going to be $3. This is going to stay until I go ahead and cancel this, or until expiration date, as you saw, of October 3rd right here. So that's how you use that first set of information, and that's if you're already in the trade. Now I'm going to go ahead, I'm going to show you a secondary source that can be used in order for you to find the expected move. Then I'm going to go ahead and show you one additional way if you have not actually executed the strategy yet, if you're actually thinking about it. So let's go ahead. So what you're going to do, you're going to go to any Google search engine or Yahoo or anything, and you're going to go ahead and type in expected move and type in the stock. In my case, I'm going to put expected move for Robinhood, and you can see to the top here. What that's going to do is that it's going to open up this website. This should be your first one, which is going to be barchart.com. So now we're going to go ahead and we're going to scroll down. So the first thing you need to know, this works if you have not entered the traders yet. The first thing you need to know is what your expiration date is going to be. So I think I'm going to use the expiration date of October 31st. Now, the current share price you can see is around $117 here, and the expected move is going to be $17.58 either to the top side or to the bottom side. Now, to the upper price of Robinhood, if Robinhood were to make a move from the current price right now, they're saying that it could go as high as 134.96. Now, based on experience, I could tell you for Robinhood to get to 134.96 is not going to be very easy to do because that is going to be an all-time high. Even if it does go ahead and get to that price, it's not going to maintain that price for a very long time because once again, that's going to be an all-time high for Robinhood. Now, on the low end of the spectrum, if Robinhood were to go down from the current price of 117, they're saying the expected move they expect is going to be $99.80 on the low end. So the expected move of Robinhood to the top side by October 31st is going to be 134.96, and the expected move to the bottom side is going to be 99.80. Now, how are you going to use this information in order for you to go ahead and choose your strike price? So for that, let's go ahead and we're going to go back to Robinhood and we're going to go ahead and get back into the options chain. Okay, so let's go to trade hood options down to the bottom and open up our options chain. And you guys should know this by now. This down here is the options chain. So what I'm going to do, I'm going to demonstrate this with two different option strategies. Let's start off first with the cash secured put. So we're going to go to sell, we're going to go to put, and we're going to choose the strike date. Remember the strike date was October 31st. So let's go ahead and look for that. And that's going to be right here. Now, the cash secured put is a bullish option strategy. So what we're going to do, we're going to go ahead and use the lower end of the expected move, which is a 99.80. So that's going to be our basis for choosing our strike price. So the strike price I'm going to be choosing is going to be anywhere around the 99.80. Let's just round it up to $100. So I could go with this $100 strike price here based on the expected move that I saw there. But being that I'm an ultra conservative investor, I'm going to go one strike price down. I'm going to go to the $95 strike price. Now, this is how you use that information. When you're doing the cash secured put, you could go ahead and use the expected move on the lower end of the spectrum. And in this case, that's going to be lower than $100. Now, for the upper end of the spectrum for the expected move, let's go ahead and switch the strategy. So now I'm going to be doing covered calls. So we're going to go to sell, we're going to go to call while maintaining the exact same strike date. And now we're going to go ahead and choose our strike price based off of the expected move. So the expected move was 134.80. So let's round it up to 135. So I would be looking to choose a strike price of 135 or higher. Now, the market always goes up more than it goes down. So I'll be extra conservative once again, and I'm going to go ahead and choose the price right above. So that's going to be the $140 mark. Now, this one is a bullish option strategy. So the bullish option strategy, you're going to use the higher end of the expected move. So there you have it, $140. So that's how you use the expected move from bar chart in order for you to go ahead and choose your strike prices. And that's going to be based also on the option strategy that you want to use. Now, lastly, I'm going to show you how to use or find the P&L if you have not actually entered the traders yet. Now for that, we're going to go ahead and we're going to go to Robinhood Legend right here. Let's go ahead and open that. Now, what this is, this just gives you a new format of what you've been accustomed to. So I'm going to try my best to go very slow in order for me to make you guys understand this new outlook here. So if you are new to this, what you're going to start off with, you're going to start off with a blank screen like this one. What you want to do now is that you want to start creating your charts right here. So I'm going to go to the right here. I'm going to use the options chain and I'm going to drag it right here. Now, you may have to adjust it just a bit. So what I'm going to do, I'm just going to pull this out just a bit. You could make it as tall or as wide as you want. I'm going to leave it just this size because I'm going to need to use this area right here. So once again, what I want to show you is that if you want to get the simulated returns or the expected move, if you have not gotten into the trade yet, you anticipate getting into the trade, this is a feature that can be used. So you could go right up here to simulated returns and nothing is going to pop up. However, I did show you that I have a contract open and it's right here. If I go ahead and enter the contract right here, if I go ahead and open that up right now, you're going to see I do not have access to the simulated returns because this is a simulated returns. This is what you're going to use before you actually enter into it. The fact that I'm already in the contract, this does not help me any. So what I'm going to do, I'm going to change the strike price. I'm going to change the strike date. I'm going to go use the same date right here, which is the October 31st. Let's go ahead and select that. Now, what I'm going to be doing, I'm going to be doing a cash secured put. Now, I know this looks a bit different to you guys than what I normally use. So right here to the right side, you're going to see these are our puts, and to the left side, these are our calls. If you're using any brokerage platform apart from Robinhood, this is usually how the option chain look. And for those of my European subscribers, you guys are quite familiar with this look right here. So what I'm going to be doing now, I'm going to be doing a cash secured put at the same 115 mark. As you can see, 115 right here. So I'm going to go ahead, I'm going to select right here. Now, as you're going to see to the top, it's a $115 put and it's sell to open, so hence a cash secured put. Now, really quickly, for those of you guys not familiar with the cash secured put, this is an income generating option strategy. Once I go ahead and do this option strategy, I'm going to be receiving money. The amount of money I'm going to be receiving is going to be $874. Now, in order for you to do the cash secured put, you're going to need to leave a collateral, and that collateral is going to be $11,500. But this is not the purpose of today's video. The purpose of today's video is how you're going to use the simulated returns. Now what we're going to do, we're going to go ahead and open up the simulated returns to the top here. Now it's highlighted. I can actually go ahead and use it. And what you're going to do, you could start from the bottom or you could start from all the way to the right. Let's start from the center. So here shows you the current share price of Robinhood. As you can see to the top, 117.66. Now, as I move left along the line, I'm moving to show the price deduction. So from 117 right here, if I go left, I'm going to show you what's going to happen if the price goes down. So as the price goes down, you could see that you're going to end up losing on the trade. So you're going to be at a loss. Now, if I go the opposite direction from here, and I go all the way to the right, you're going to see the share price here is going to start going up. So as the share price goes up, then my P&L right here goes up as well. So that is just one way you could use the simulated returns, and this only works if you have not gotten into the option strategy as yet. So feel free to go ahead and play with that. Now, there's one more way that it can be done, and that's by using the timestamps down to the bottom. As you can see here, you have your time in effect right here. So if I were to hold down this widget right here and scroll over, what that's going to do, you're going to see the time right here, September 16th, that's going to be changing. So I'm going to go to the right. Now, as I go to the right, what you're going to notice is that your P&L changes as well as your chart. So as the time goes further out, you're going to be up on the trade if the share price stays at 117 or it goes above. So once again, feel free to use this in order for you to practice. Now, one last thing I want to bring to your attention about this chart, what I like about it, in addition to the simulated returns, it also highlights your Greeks right here. Now, there are 5 Greeks, and right now you have your delta, your theta, your gamma, and your vega. The one that's missing is going to be your rho. Now, rho is as useless as having a sangria flavored soda, so I guess that's why Robinhood decided to leave it out. But I really like this being displayed here because, as you can see, once I go ahead and change the date here, your Greeks are going to change as well. Now, I have made several videos where I showed you how I choose my delta, and I always tell you, you could choose whatever delta you want. Once the stock price changes, so too will your delta, as I'm going to demonstrate one last time here. As I move this, you can see your delta is changing as well as your other Greeks. So hence, I usually say if everything else remains constant. So there you have it, investors and future investors. If you want to find out a share price expected move on any stock, you could go ahead and do a search for expected move, and then you're going to know how to use it. You're going to go ahead and use it based on the strategy that you want to use. That's going to determine whether you're going to use the upper side of the expected move or the bottom side of the expected move. Now, if you're already in the trade, then Robinhood is going to give you a simulated returns of you being in the trade. If you're not in the trade, you're anticipating going into the trade, then you could go ahead, pop into Robinhood Legend, and feel free to use the charting right here. Now, for those of you who have made it to the end of the video, you guys are the real investors and future investors. I really hope this video helped you guys better go ahead and choose your strike prices. Now, if you guys have not already by now, now would be the perfect opportunity for you to go ahead, like the video, and subscribe to the channel for more videos like this. Join me again next week, Wednesday, where I'll be going back to my live trading videos. Now, until the next video, keep pushing your investments.